All right. Yes, perfect. So again, a little recap. In the previous video, we went over fair value gaps. Those fair value gaps, they tell us intention. They tell us quite a lot about price. Basically everything we need to know. Then in the first video, we went over foundational levels and the PD arrays. The PD arrays that lead to the foundational levels, all the PD arrays that we use, etc. Now, if we add on to that story, and basically what you've already gotten a sneak peek of is order flow. Because the fair value gaps and the PD arrays in itself, they lead to order flow, which is also what we're going to touch on right here. So, why are fair value gaps so important to us? Like mentioned in the previous video, that is because they tell us what order flow is doing. They tell us everything about order flow. And if we understand again the theory of the bigger player in the game, then of course that bigger player has orders in the market, which leads to a flow of orders. So if we follow his or hers flow of order, then we have order flow. So wherever the orders are flowing towards, that is where price is now going towards. So order flow is what we mainly want to focus on. That is at the core of this strategy, of this mentorship, is order flow. And that is also why I love order flow so much, why I haven't shared it on YouTube, because I just love order flow. Now, of course, if you have watched the YouTube before without watching the mentorship first, then you might not know what order flow is. If you've watched the mentorship first and then you have watched the YouTube afterwards as well, then you can understand, here and there I can see the incorporation of order flow inside your YouTube. So that is also a mind-opening thing. Now, right here, to follow order flow, we need to understand what order flow actually is at a very basic level. Bullish order flow consists of discount arrays holding. Bearish order flow consists of premium arrays holding. So whichever PD arrays are holding inside the market, that creates order flow. So order flow is just PD arrays holding to one side of the market. If discount arrays are holding, then it's bullish order flow. If premium arrays are holding, then that means there is bearish order flow. What does that holding mean, etc.? That is exactly what we're going to go over as well. Now, then what consists of one order flow lag? So an order flow lag, if PD arrays are responsible to create order flow, very logically thinking, then the PD arrays are our order flow. So one lag consists of PD arrays, which is our order flow lag, which creates the flood and the lot theory. Well, the theory is almost a fact that we have right here. So right here, if we follow this lag lower, and again, with a lag, when I'm referring to a lag, I'm always referring to the most recent lag. So the most recent lag is the most recent swing high with a fair value gap in the lag right there to the swing low. The swing low, if we're bearish, can be a little bit subjective, can also be this low right there. That is perfectly fine, because that is not super important to know. It's more important to know that where's the recent swing high created in a bearish lag. That is the most important part to know. Wherever the swing low is in a bearish lag doesn't really matter. As long as we understand we have a swing high with a fair value gap lower. That is important to understand. That lag lower has what? And again, I'm always, and this is what we're going to touch on a little bit later on, I'm always using the most recent lag on every single time frame. So, I don't know, I like to make the comparison. I'm not sure if it's a very accurate comparison, but the analogy is sort of the relativity theory, right, that Albert Einstein has or something. And where, depending on what time frame you're looking at, order flow changes. So that is also the case with here. Whatever time frame you are looking at, order flow changes on every time frame. That is why the time frames are your main toolbox. They are your toolbox to tell you what price action overall wants to do, which is also briefly what we touched on in the previous video. So right here, we have the most recent lag lower right there. That most recent lag has a couple of PD arrays in the lag, right? Since it's a bearish lag, we are mainly focusing on just premium arrays. So the premium arrays, let's count them. We have this fair value gap right there. Then we have this mitigation block. We take the wick. Why is that? Because again, that's overlapping with the fair value gap directly. All right. Then we have this fair value gap right there. Then a little bit higher up, we have this. You could call this definitely an order block refined inside the mitigation block. Then afterwards, we have the swing high that is sitting right there. Those are the PD arrays that we have at that moment in time in that lag lower. All right, that is quite interesting. Why is that interesting? Because that creates your order flow lag. This is your order flow lag. An order flow lag lower or an order flow lag higher, any order flow lag, when I refer to an order flow lag, I always refer to a lag that has a fair value gap in the lag. Again, the fair value gaps, and the reason why we went over it in depth yesterday, is because the fair value gaps lead to order flow. Without fair value gaps, there is no order flow. Without fair value gaps, there's nothing. There's no price action. There's no PD raise, no valid PD raise. There's nothing to talk about if there's no fair value gaps. So the fair value gaps lower right there tell us, all right, this is a valid order flow lag right there. That's everything right there. Then afterwards, we see, all right, we have this premium arrays. So count with me. This is 1 fair value gap, 2 mitigation block, 3 fair value gap, 4 order block, 5 swing high. So there's 5 different premium arrays, or well, 2 are actually the same. There's 5 premium arrays that we count in that in the order flow lag lower. All right, that's good to know because that creates our flood and our lot concept. Flood, and the way I spell that is, by the way, flood. This is flood. Flood stands for first line of defense. Now, sometimes you will also hear me refer to it a little bit different, but that is also something that we're going to explain. Don't worry. Then we have lot, which is also sometimes you hear me refer to it a little bit different. The last line of defense in a different sense. That is also something that we are going to explain. So that stands for last line of defense right there. So we have first line of defense and then we have last line of defense. Now we also have the odd, and that is the overlapping defense. So this flood, the first line of defense, says it already very clearly. The first line of defense, and the way I see that is, again, that defense. What is that defense? Let's define that defense. If we want to continue lower, then there is some kind of defense that we are creating. As in, there's people defending, there's PD raise defending price action to actually continue lower. So the first line of defense here is this fair value gap. The first line of defense, again defined, is the first premium array that you encounter in a bearish order flow lag. In a bullish order flow lag is the first discount array that you encounter. So this right here is the first line of defense. Then the overlapping defense is the first overlapping part. The first overlapping part is this mitigation block right there with that fair value gap right there. Now, here we have, it's not the best example. We'll go over better examples as well, because here we have also this overlapping defense technically seen. If we only take the first one, it would have been this one, but this is also an overlapping defense right there. It's the overlapping part. Usually you have a flood, an overlapping defense, and you have a lot. So if we only have those two, then it becomes a lot more clear as well. And then the last line of defense is this swing high. The last line of defense is, again, depends on the context, because sometimes I refer to it differently. That depends on the context, but that's something we're going to go into when we get to the way more advanced stuff. But usually, or 9 out of 10 times when I'm referring to the last line of defense, unless I say so, unless it's different and I mention it, the last line of defense is always a swing high or a swing low in an order flow lag. Because this is the last premium array that can get swept, can get traded to that premium array, to then continue lower. Is the last line of defense. Because if that doesn't hold, then the whole order flow lag is invalidated, and the whole order flow lag is basically discarded, and we then can look to continue higher overall. So that is the last line of defense. So we have the first line of defense, the overlapping defense, and the last line of defense right there. That creates in itself an order flow lag. And the order flow lag is again made valid by having that fair value gap in the lag itself. That is very important. That creates an order flow lag. So off of these premium arrays, somewhere around there in one of those premium arrays, that will be responsible for pushing price lower. So overall, we're bearish right there. And we've just established, all right, one of those defenses will be responsible for pushing price lower. Now, I know those are 5 different PD arrays. I know that's quite a lot. How can we know exactly which one wants to push lower? That is what we're going to build on throughout this mentorship as well. So don't worry, it's just understanding this concept first before we actually can get to the very, very good accuracy. So right here, we have established now this bearish order flow lag. So now I just want to suggest, all right, let's just follow the order flow lags lower. So then we have a next order flow lag. Now, you can take this swing high if you really want to refine it, because essentially this swing high created the fair value gap. You can also, and this is where market structure comes in, which we're going to touch on later on, is right here, is this high, is also what you can use. For example, if we take already an advanced example here, if you were to enter here and you want to squeeze out a little bit more RR, instead of covering this high, is that high, because we understand there's nothing to rebalance above that high. So if this high is going, then that high is also going. So that is how you can refine that a little bit and you can get more accurate with that. So right here, we have this fair value gap. Then we have somewhat of a breaker right there, we have somewhat of a, yeah, you could call it a breaker if we have a PD array right there. The most important part here is that we have this small consolidation right there, which creates another swing low, which essentially is another breaker or mitigation block right there, which we then continue lower off of. That is the overlapping defense right there. And then again, if we just follow along with the fair value gaps, because the fair value gaps here are the most important ones, and we just follow along with the fair value gaps, and this creates a new fair value gap lower. That fair value gap initially does not create a new fair value gap lower, which that means that we are not creating a new order flow lag lower right there. So this whole lag is our new order flow lag right here, until we create a new order flow lag lower, which has a new fair value gap, which then becomes this new order flow lag lower right there. That new order flow lag has this fair value gap right there. And that new order flow lag creates this new order flow lag right there, which has this fair value gap right there. And then that new order flow lag creates this new order flow lag right there, which has this fair value gap, and that creates this new order flow lag right there, which creates this new fair value gaps and creates this new order flow lag right there, and that creates this new order flow lag right there, and that creates, hey, that doesn't create a new order flow lag right there, and fails to create a new order flow lag lower before we now start to continue higher. That is interesting. By just looking at the fair value gaps here, we established that this whole move bearish right there was just very simply followed by order flow. Very simply followed by order flow. And then afterwards, we also established once order flow didn't follow through anymore, and we started to see bullish potential order flow, that is when we are now seeing this huge move higher, which in the previous video we discussed on, because every fair value gap and every lag higher, every swing low that created the fair value gap higher was holding right there, which is order flow. So how can we now, of course, because we now have the basic understanding of order flow. All right, this is order flow, all fun and games. But how can we now confirm order flow? Because I think we can all understand that order flow just doesn't come out of thin air. It's not that we have one leg higher or one leg lower and all of a sudden we have order flow. No. So how can we confirm order flow? Well, first of all, we need to understand the higher picture. If we don't understand the higher picture, then we can't understand order flow. Because order flow, I just in the beginning of the video we mentioned, order flow is like that relativity theory. It's relative to every time frame. So it's different on every time frame because the order flow here was overall bearish. And let's now zoom out again to that weekly time frame. Because on a weekly time frame, like mentioned in the previous video, what did we see? We saw a bullish fair value gap right there. And overall, what are we seeing right here? Bullish order flow. Have we ever gotten bearish order flow here on the weekly time frame? No. We had always bullish order flow. This lag higher, which created bullish order flow on the weekly time frame right there. Even before that, bullish order flow created this new bullish order flow lag higher right there. With that fair value gap that is sitting right there. That fair value gap or that order flow lag created now a new bullish fair value gap higher right there, which is the new order flow lag. And we can even refine that stop loss again a little bit towards that right there. That is the refined order flow lag right there, because that swing low was responsible for creating that fair value gap. So in this lag right here, somewhere along those lines, we are going to go higher. Now in this lag, it's very easy, right? It's very easy to spot what are we going higher from, because right here, the first line of defense is actually, let's refine this very clearly, it's actually this high right there, which is the first line of defense. After that, it's the fair value gap, which usually when we come back into an order flow lag, we are always looking to come back into a fair value gap. So if the fair value gap is lower and is not the first line of defense, that means it's the overlapping defense. Because like we just saw on the 1 hour as well, is that when we have an order flow lag lower or higher, the first line of defense is usually a fair value gap. If that is not the case and it's not a fair value gap, that means that it's a mitigation block, a breaker block, or an order block. That also means that there's a fair value gap lower than the first line of defense, which means that we are likely going to trade into the overlapping defense, because fair value gaps right there are usually the ones that we want to trade into first before we continue higher or continue lower. So then the fair value gap becomes the overlapping defense. So let's make that very clear before we actually move on. That might be confusing. I can understand that. Is that here, if we look at all these lags lower, well, yes, if we look at all these lags lower right here, we have this first line of defense right there. It's a fair value gap. This first line of defense right here is a fair value gap. This first line of defense is a fair value gap right there. Fair value gap. Those are all fair value gaps as the first line of defense. But if we take a look at this right here, this fair value gap right there, in that order flow lag lower, where we could take this high right there. So in this lag lower, that first line of defense is not the fair value gap, because it's a mitigation block right there. Because we're first coming into that before we come into the fair value gap. So all these fair value gaps that are in both these lags right there are what? They are already overlapping defenses. So that is again how we would view that. So that is when the fair value gap is not the first line of defense, but it's an overlapping defense already. It's already an overlapping defense. So right here, if we go back again to the weekly time frame, then again we have this overlapping defense right there in the fair value gap. Overall, we did not really have much choice. As in, we did not really have a lot of choice to choose from where we can say, all right, we might be going higher from here, from there. No, we just have the weekly fair value gap. All right, that makes it quite easy, right? Makes it very easy, because all you now need to understand is that the next weekly candle will likely be bullish. That's it. So right there, if we then go back into the 1 hour, because on the order flow on the weekly time frame told us it was bullish overall. So now we need to understand, all right, the recent order flow lag on the weekly time frame was bullish. That's all we care about at that moment in time. If we go back into the daily first, actually, and we look at the daily, then we can see that we have this bearish potential order flow lag right there, because we have a fair value gap lower, which creates this bearish potential order flow lag right there. And there's a reason I say potential order flow lag, because order flow at that moment in time is not confirmed yet. So that right there, that order flow lag is not really relevant, because order flow on the higher the time frame, so the higher the time frame is the stronger time frame for order flow. So again, it's the same with the fair value gaps that we talked about in the previous video with the PD rays as well. the higher the time frame the order flow is, the stronger it is. So monthly order flow will always win. It's the strongest order flow you can get. So we need to make sure 1 minute order flow is in context of 5 minute order flow. 5 minute order flow is in context of 15 minute. 15 minutes of the 1 hour, 1 hour of the 4 hour, 4 hour of the daily, daily of the weekly, weekly of the monthly. And when I say in context there, I mean that it's in context as in it's in alignment with that understanding. Because when in context, the daily context here is in context with the weekly order flow. If we understand that the daily right there is weaker than the weekly. So now that we understand that, we have acknowledged that, then it's in context. So we're not expecting lower prices off that daily fair value gap. We're expecting a higher price because we're following bullish weekly order flow. Which also, again, leads to the same point that we had yesterday. This bullish order flow lag right there on the daily time frame is not strong because it's not in context of the weekly time frame right there. Because the weekly order flow is sitting below it right there to then continue higher. So this daily order flow is not strong order flow. So that is, again, that's the tricky part about order flow. But once you can understand those time frames, and this is also where practicing comes in. During live trading, remind yourself, what is in context? Do we need to switch time frames right now? Are we creating a new fair value gap above us, etc.? Because we need to have those time frames in context to be able to fully take advantage of order flow. That's very important. So that is, again, the base of order flow. Then, currently, daily is in context of the monthly. Perfect. So right here on the 4 hour, we can see, do we have anything on the 4 hour? Well, we have quite a lot of things here on the 4 hour. We potentially have an order block sitting right here. We have a breaker sitting, or fair value gap sitting right there. And we have this low, this order block as well to the left right there. Then we have this fair value gap right there. And I'm doing this on purpose. I can see already, I can potentially see members that have been here for a while know what I'm doing. I'm doing this on purpose because this is not how you go about order flow. I just mentioned in a little bit earlier, order flow is always the most recent leg. That is what we need to understand, because you are not going to mark up PD rays from the left of your chart that are not in current order flow. So again, current order flow is always relatively seen to the time frame you are on. So on the monthly, current order flow was what? Current order flow was this whole leg higher right there. So you're only marking this leg higher right there for your monthly PD rays. Just because we have a monthly order flow leg right there does not give you the right to then go into the 4 hour time frame and say, but the 4 hour PD rays are inside that monthly order flow leg, so it is part of our current order flow legs. No, that's not how it works. The PD ray you want to mark out needs to be in current order flow of the time frame you are looking at. Meaning that all the PD rays on the monthly time frame are these right here in this leg higher. On the weekly, it was these legs higher right there. Now, can also potentially hear you say, I just want to avoid any confusion. Why did we not come into the monthly order flow right there to continue higher? And why did we here respect the weekly order flow? It's all things that we are going to go over. Don't worry. Any confusion will be out the door as soon as possible. But we need to talk about every single small little detail here. So here, weekly order flow was this right here, this leg higher. So that is the only leg that you can use on the weekly time frame to mark out your weekly PD rays. Only that leg. Then on the daily time frame, we had a little bit more difficult situation where at this moment in time, the only leg you could use was this leg right here. Then afterwards, the only leg you can use if we are bearish right there, or we have this bearish leg, is this leg right there. That's your only current order flow leg where you can use your daily PD rays, which currently has turned bullish again, which right there, this is your only leg where you can now look for bullish discount arrays right there. That's important. Then the next part is the 4 hour, and it's the same exact thing. You're looking at the current leg that we have created. So the current leg, the actual current leg, is this right here, where you can only look at that leg for your 4-hour discount arrays right there. That's the only thing you can do. So everything from the left right here, let me delete everything here. Everything from the left, as in this high right there, that swing high, is not a swing high you want to trade off of. This swing high is not a swing high you're going to trade off of. This swing high is not a swing high that you are going to trade off of. That 4-hour, those 4-hour premium arrays are not something you want to trade off of. Meaning that is not where you're going to be looking for your entry pattern. Because it's clearly not part of our current order flow on the 4-hour right there. You can use them as targets. Targets, yes, to trade off of, as in the boundary to now go into your entry pattern time frame. No, that's not what you're going to be using. If that is not super clear, again, that's perfectly fine. We're going to go way deeper into that as well in the execution week. So right here, we now know, all right, perfect. So the weekly, everything is in context of this weekly time frame. So here we followed the 1-hour bearish order flow lags lower to then come into the weekly PD ray right there to potentially continue higher, because all we're doing right there is weekly order flow is trying to follow through higher. With following through, what does that mean? Following through and order flow lags getting respected means there is a new order flow lag getting created off of that previous PD ray, of that previous order flow lag. What does that mean? Now, we have this order flow lag lower right there. This order flow lag. That creates this fair value gap right there. In order for it to follow through, it needs to create a new order flow lag lower. In order for it to create a new order flow lag lower, it needs to have a fair value gap lower. So once it creates a fair value gap lower right there, it has officially followed through. So all you're doing right there is you can ignore the swing lows. All you're doing is you're looking at the fair value gaps that are being created at that moment in time. That's the same with following through on this high right there. That low lag, then we create this new lag right there, new swing high, to then create a new lag. That is following through. And now we can see again that here we have this fair value gap off of that order flow lag. And we continue lower. Did it follow through though? It did not follow through. Why not? Because this right here did not create a new order flow lag lower. Why not? Because it did not have a fair value gap lower. Then it becomes interesting, because now we have the story of order flow lags on the 1-hour time frame here. And we have this fair value gap, which is the bullish weekly order flow, where we are expecting higher prices from potentially. And right here, we are now seeing a bullish order flow lag. This is also known as your ST, as your sharp turn. This is the very basics of a sharp turn. A sharp turn is something we are going to define. Don't worry. A sharp turn is where we have a bearish fair value gap inside a bullish PD ray, so into a bullish PD ray, and we have a bullish fair value gap outside, so out of that bullish PD ray again. So what do I mean by that? Let me define that more clearly. It's displacement in, displacement out. That is what you want to see for your ST, for your sharp turn. So where on YouTube, if you're coming off of YouTube, I only mention a bullish fair value gap. Yes, that's the first part of it. As in, well, actually, that's the last part of it. Because for a bullish ST, you also need a bearish fair value gap. You need bearish momentum into the bullish PD ray to create an ST. So a sharp turn right there is displacement in, and displacement is defined again by a fair value gap. Displacement equals a fair value gap. Displacement in, displacement out right there. The displacement was already shown by this fair value gap right there. There are different levels to a sharp turn, which we're going to go into. This is the very basics of a sharp turn. This is, again, this is going to be a whole separate video about STs as well. So don't worry, it's going to be a lot clearer than what we talk about here. But sharp turns are created through order flow. And that is why I mentioned it right here, because that's the first reversal area that we have. That is a sharp turn. A sharp turn A bullish sharp turn is basically a bearish order flow lag into the bullish PD array where you're expecting higher prices from, to then create a bullish order flow lag right there. At that moment in time, you have an ST, a sharp turn right there, where price is 50-50. Because at this moment in time, and if we use the replay tool right here, at this moment in time, we had this bearish order flow lag, and we had this not order flow lag, that didn't follow through. So at that moment in time, we have bearish value gap, bullish value gap. This is where price has created a sharp turn, where price is now 50-50. With the context, that's important to understand, because there's a reason why I use the weekly here. Because without context, this is clueless. If you don't have any PD array to trade towards, to trade off of, this is futile. It's nonsense. It's not going to work because you're trading STs all over the place. Because this is not an ST right here. Why not? Because it wasn't in a discount array that was in current order flow. As in, there was no discount, no daily discount array right there that was part of daily order flow right there, bullish order flow. No 4-hour, no weekly. This was the only discount array that was right there that was valid to trade off of in our order flow, in our current order flow lags. So this is not an ST right there. Yes, you can call it an ST, but to be able to be a fully valid ST, it needs to come off of a PD array that is in the current order flow lag. So right here, this is an ST, a sharp turn. The first turning area of that sharp turn is again bearish value gap, bullish value gap. That is where we have 50-50 price action. Now, if you combine the timeframes correctly, you've also probably heard me say on YouTube, then you only need a sharp turn to enter off of. That is also something we're going to go into. There's many details to it, but we first need to understand these things. And the reason I mentioned that constantly, that we're going to go into it, is because I want to avoid any confusion right here. That's my goal. So right here, to confirm order flow right now, because at this moment it's 50-50. To confirm order flow, we need a retracement into a discount array, because we are waiting for bullish order flow, a retracement into a discount array to then continue higher off of that. So what does that look like? A retracement into a discount array or a PD array to continue higher off of that. Right there. And what does that create? That creates a new order flow lag. Once we retrace into a discount array, we create that new order flow lag higher right there. That is order flow confirmed. So if you're coming from the YouTube, because I can understand that the YouTube right there, I mentioned once, you need 2 fair value gaps. Yes, you need 2 order flow lags. That's what you need. That is the first order flow lag higher, retracement into the order flow lag, into that flood and that lot concept, to then continue higher, which creates the new order flow lag. That's 2 fair value gaps that you would need right there to confirm order flow, to potentially look to take that trade. Once order flow is confirmed right there, there's a high probability of this right there, that PD array, the original PD array that you're looking for order flow to confirm on, to follow through right there. And that is exactly what order flow is. Now, to avoid confusion, there's a couple of different manners on how you can actually retrace into a PD array itself. We have mainly 3 manners, I would argue, where you have the clear, obvious, like this, where the first you have the order flow lag right here, and then afterwards we retrace back into it and we just continue higher off of the fair value gap. We have down candles, whatever it is. Then the second manner on how you can confirm on how we retrace into a PD array is we have this right here. Right there, also this thing into the fair value gap, but this fair value gap or this candle is not an up candle, it's a down candle right there. So if these were all down candles right there, and this middle candle that created the fair value gap, that was also a down candle, then this would also be considered a retracement into the premium array, because we actually came back into the fair value gap to continue lower. The same for what we did on this right there. We retraced and then continued higher. Now there's one which I call the gray area. You could call it the gray area. It requires more experience, more intuition, which you can build onto, which we also are going to build onto later on. But it's a little bit more, how do you call it? It's a little bit more, it requires more experience. Let's just put it that way. And for now, you can stick to the clear retracements. But overall, once you are getting more advanced, you are also likely going to use these different retracements that we have right here. So one of the different retracements that we have is, for example, if we, let me find an example. Yeah, for example, here, we are creating this order flow lag lower. So let's say we are trying to confirm order flow right there. We have the first order flow lag lower right there. Then we have a second order flow lag lower. And then this order flow lag lower right there, if you were to confirm order flow in that. So we are now, again, trying to see, all right, this one, does this premium array want to push price lower right there to confirm order flow? All right, let's see what is happening right here. We have this lag lower. Then we have this wick right there higher. That wick right there comes back into what? It comes back into a premature order block. Because once we create this new order flow lag lower right there, that new fair value gap lower, that we have right there, that creates an order flow lag, and it's now confirmed order block. So sometimes you'll see me refer to when we have the first fair value gap, and I'm mainly saying that if we have this first fair value gap right there, which is a very small fair value gap right there, or it's not even a fair value gap actually, it's not a great example. But if this was a fair value gap that was sitting right there, and we had the first fair value gap, we did not have a clear retracement, but we did have wicks coming back into the order block, into mitigation block. Then we create a new fair value gap lower off of that. That can also be counted as confirmed order flow. That is for your entry pattern later on, which again, once you are more advanced. For now, it's advised to just stick to the clear retracements like we saw on the later examples right here, right there. But let's say, for example, same scenario where we have this move higher. We create the ST right there. We create the ST right there. And this order flow lag higher has a float, a lot, and an odd, right? So the float is right here. This is actually your float. And the reason I mark out the high right there is because it's a breaker and it's not overlapping with a fair value gap, a potential fair value gap, but not a fair value gap just yet. So this is already a valid breaker right there. So if we came into that and we now create it right here, we now create it like this, candles higher off of that without coming into this fair value gap lower right there, that also would have confirmed order flow. Why is that? Because we already came into a discount array right there to continue higher. So we don't necessarily need to come into the fair value gap to continue higher. We already came into the float to continue higher. I hope that's a clearer example than the previous one I used, because it sounded a little bit vague in my ears. So hopefully that makes more sense right there. All right, so the next part to understand is that right here, we can just look to continue and follow through on order flow. But at a certain moment in time, once you are following through an order flow and you get lost on the order flow on the respective time frame that you're looking at. So for example, if you go into the 5-minute time frame right here, we have a lot of order flow lags. We have bullish, we have bearish order flow lags. There's quite a lot of order flow lags, right? So how can we navigate this? It's understanding the time frames again, because our 5-minute here is not in context of the 1 hour because we're not paying attention to it. So now we need to understand the 1 hour right here is very simple. It's very simple to navigate because all we're doing here is following through on order flow on the 1 hour. And that is all you are essentially doing throughout the mentorship, is you're looking to follow through on order flow. But there is a twist to that because we're looking to follow through on order flow. Yes, we are. But the next thing is that there's also a different side to order flow, which that is the end of this video. This is not the end, but that is going to be the end of this video because that leads us to the next video, which is going to be about context, because we have two different types of context. For example, we have this 1 hour fair value gap. Why does that not hold? Well, let's zoom out. All right, we just have this 4 hour fair value gap. This 4 hour fair value gap right there can be responsible the same way we saw this weekly fair value gap right there to then push us higher. Towards what? Because context is always from a discount array to a premium array, or from a premium array to a discount array. So you're always looking to trade from, and it's on the same time frame. That's on the same exact time frame. You're looking to trade from a PD array to a PD array. That's context. That's order flow. Because all order flow is doing right here is constantly moving from this 1 hour fair value gap right there to this, 4 hour fair value gap to that 4 hour swing high right there. And then it creates new context where we have this 4 hour again, 4 hour fair value gap to that 4 hour swing high right there. So it's discount premium rate, discount premium rate, discount premium rate. And it's the same thing we saw on the weekly, where the weekly right here is discount to premium rate in the form of that previous week high right there. That is context. It's the same for your bearish, where on the 1 hour right here, you're moving from this right here, fair value gap premium array, to the previous X low, the previous 1 hour candle low right there, and potentially even lower, which creates the first context right there. It's the same for this fair value gap right there, premium array, to now this swing low, which creates that context. It's a premium to the discount rate. That is not the only context that we have. So that leads me to the next part, which is order flow in itself, very in depth. Because right here, if we look at order flow on crude oil, and we just very simply have this daily fair value gap that is sitting right there. That daily fair value gap is where we can expect lower prices from potentially. That's all you need to understand right now. It goes very in depth, but that's all you need to understand right now. Then if we look at the 4 hour time frame right here, and we follow 4 hour order flow, then we have not really an ST here because there's no bullish fair value gap in this leg higher. We have this bullish fair value gap higher right there. That creates, all right, we are creating nice order flow right there. We are confirming order flow. And then afterwards, if order flow wants to follow through, then we have a few fair value gaps that we can push higher from right there. The highs as well. But it's important to understand that right there, we just have this leg higher. That is our float, our lot, our odd, and there, that order flow leg is where we can push higher from. We tried to push higher right here. And once we try to push higher right there, this is now expected to do what? To create a new order flow leg higher, to create a new fair value gap higher. Once this happens right here, we fail to follow through on order flow. So if order flow is not bullish, then what is it? Bearish. So if we're not following through on order flow higher, then obviously what are we most likely doing? We are going lower and we're targeting that order flow. So this is the unusual context that you have. The usual context was again here, that discount array that we're seeing right there to that premium array. So the PD array to that PD array. The unusual context right now is where we are not following through on order flow. We are not creating that new fair value gap higher, which leads us to, all right, now we have unusual context. Because if this is not following through, what is the closest discount array that we can target right here? The closest discount array is this swing low. So that is the first discount array, which then creates this high right there, which is the protected high, which creates your premium discount and essentially your premium array, which was the previous context, to that discount array. That's the unusual context. That is context where order flow is not following through. And that creates on the lower time frame an ST right there, a beautiful sharp turn where we eventually continue lower, which leads us to the next story where we have this daily fair value gap, which could be an order flow lag in itself, right? It's not following through. All right, we already had context from the premium array to the discount array, but if we were to ignore that and we just had this and we didn't have a fair value gap to the left right here, so we do something like this. We don't have a fair value gap right there. Perfect. So right here, we now are not pushing higher off this daily fair value gap. which creates that context again. Then we have this protected high, which is the premium array, and we have this discount array, which is the target right there. And that is your unusual context right there. Now, that is, of course, the context is what we're going to dive into more next video. So don't worry if you don't fully understand it. But the reason I wanted to mention it right here is because I would like for you in the next 24 hours or whatever it is when you're watching these videos is practice order flow. Follow the order flow lags, but also follow the order flow lags that are not following through. So we are not creating a new order flow lag off of that, because that's the same thing that we saw on GBP JPY before we actually reversed off the weekly fair value gap. Because if we look at that, then right there we had this order flow lag, and that did not create a new order flow lag lower. Sweeping, reaching the target, but sweeping the target right there, creating that boundary, that new context, that unusual context to then look at that high as a target. So if you were on the 5 minute, that could have already been an entry itself. But that is, of course, very premature. We're going to go over that later on in videos. These are only the first 3 videos. Come on. So now you already have a great idea with just order flow. If you just practice order flow for weeks on weeks on weeks on weeks on every single time frame, and you stick to the rules that we have on order flow, then you have the foundational levels already set. You have your bias, your narrative, your boundary, your target, your entry pattern, your risk management. You have everything already. And it can only get better from here. So again, in the next video, we're going to touch on context a little bit more. In the meantime, study your ass off trying to study order flow, and it will get rewarded as well. All right, perfect. Thank you.